This is Bird's Eye Zim.
Zimbabwe projects 8.5% economic growth in 2026 amid mining and agriculture surge. Zimbabwe is projecting strong economic growth of at least 8.5% in 2026, driven primarily by improved agricultural output and continued expansion in the mining sector. The optimistic outlook reflects renewed confidence within government circles about the country's economic recovery and structural reforms. Speaking at the Mining Indaba in Cape Town, Zimbabwe's Treasury Permanent Secretary George Guvamatanga outlined the government's revised projections, which significantly exceed earlier estimates of around 5%. Chart increasing key drivers of growth. According to Treasury officials, several factors are expected to anchor the projected expansion. Strong agricultural recovery, improved rainfall patterns, and increased investment in irrigation have boosted crop yields, particularly in maize and tobacco production. Mining sector expansion, gold, lithium, platinum, and other mineral exports continue to attract foreign investment. Zimbabwe's vast lithium deposits, in particular, have positioned the country as a strategic player in the global battery minerals market. Fiscal discipline and policy reforms. The government maintains that tighter monetary controls and improved revenue collection are stabilizing the macroeconomic environment. Infrastructure development, ongoing energy and transport upgrades are expected to enhance productivity across key sectors. Mining remains one of Zimbabwe's largest foreign currency earners, contributing significantly to export revenues and employment. Bar chart historical economic context. Zimbabwe's economic performance has fluctuated in recent years. 2023. Growth slowed due to drought conditions and currency volatility. 2024 to 2025. Recovery strengthened, with estimates placing growth around 6 to 6.6%. 2026. Projected government forecasts now place growth at 8.5%, marking one of the strongest expansions in recent years if achieved. Economic growth in Zimbabwe has historically been closely tied to agricultural performance and global commodity prices, making sector stability crucial to sustained progress. Globe showing Europe-Africa IMF's more conservative outlook. Despite the government's optimism, the International Monetary Fund has projected a more conservative growth rate of approximately 4.6% for 2026. The IMF's estimates reflect concerns around currency stability, external debt obligations, and global economic uncertainties. However, Treasury officials argue that differing methodologies and assumptions account for the variance, expressing confidence that domestic production gains will outperform international expectations. Magnifying glass tilted right expert commentary. Economic analysts note that while the growth forecast is ambitious, several factors will determine whether it materializes. Currency stability. Maintaining exchange rate stability remains critical to investor confidence. Inflation control. Sustained price stability will be essential for consumer purchasing power. Power supply reliability. Energy shortages have historically constrained industrial output. Investor confidence. Clear policy direction and regulatory transparency will influence long-term capital inflows. If agricultural output remains strong and mineral exports continue to expand, Zimbabwe could experience one of its most robust growth cycles in over a decade. However, structural reforms and macroeconomic stability will ultimately determine whether the projected 8.5% growth target becomes a reality.
Don't forget to share, like, comment, and subscribe. Hit the follow button. The Bird's Eye.